I think 2025 is the first year of institutional adoption of Bitcoin. I think of it as the first year of the gold rush. There's a 10-year period from 2025 to 2035. I refer to that as the gold rush years. Why? I'm going to explain it in a second, but the short of it is, this is the first year that a mega corporation, a public company, could start to buy Bitcoin in quantities, billions. This is the first year that they're seriously talking about Bitcoin being purchased by governments, by states. And by the time we get to 2035, 99% of all the Bitcoin will have been mined. The last 1% gets produced in the next 100 years. So if you want Bitcoin, you probably want to buy it in the next 10 years, because once you get to 2035, for all practical purposes, it's a capped supply, and the only way to get it is to bid up the price astronomically. So it's an important year. Let me start by talking about economic and technology challenges. This faces every investor, every executive, everybody in business, this challenge. First of all, if you're an investor, you've got to decide what to invest your money in. This is the list of all the various assets. You can buy Magnificent Seven, NASDAQ stocks, you can buy bonds, you can buy currency, you can buy REITs, you can buy real estate. What you see is that conventional wisdom is you got to beat CPI, which is supposed to be 2 or 3%, and people think they're getting more than 2 to 3%, and then that's good. But the truth is, the real inflation rate isn't the CPI, it's the monetary inflation rate. That is the rate at which the money supply expands, or the rate at which scarce desirable assets appreciate in price. An interesting surrogate would be, what's the cost of an acre of land in Miami Beach on the water? My house was built on about 3 acres, 2 acres and 1, and that land went for $10,000 an acre in 2030. And that land's at least $10 million an acre today. If you do the math, it works out to more than 7% inflation. If you look at Palm Beach real estate on the beach, there's no way it's going up 2% a year. Things that are very scarce, very desirable, are appreciating closer to the S&P index. If you want a surrogate, if you're wondering how fast is the money supply expanding, what is the cost of capital, what do I have to beat as a hurdle rate to keep my wealth? It's probably the S&P index. And so what you see here is most diversification is just destroying wealth. If you diversify out of anything other than maybe you get the Magnificent Seven, you're probably underperforming that monetary inflation rate. That's a challenge. If you're running a company, a public company or private company, if you can't grow organically 15% a year, if you're not growing your cash flows 15% a year, if you don't have a growth story saying we're going to be 20% next year, another 20, nobody wants to invest in you. You can't go public. If you are public company investors lose interest in you. Your options market collapses. Your liquidity collapses. You're in essence a zombie company. You're not going to go out of business. There's a lot of honorable businesses that grow 1, 2, 3% a year. In fact, it works out that 99%, if not 99.9% of all businesses cannot grow 15% a year. They won't tell you that, right? They'll make you feel like you're a failure or a loser if you're not growing 15 or 20% a year. But this is a dilemma, and it faces every public company, every private entrepreneur. And then here's a chart that's sobering. In the 21st century, the winners are all digital monopolies. That is the Magnificent Seven, and that's the S&P 500. And what you can see is if you're Apple, you're Google, you're Meta, you're Microsoft, you're Amazon, you're winning. Everybody else is losing. 493 companies. The S&P 500 is the 500 greatest companies in the world, or at least in the U.S., 493 of the 500 are losing. Okay? Don't feel bad if you're not outperforming Jeff Bezos. 20,000 retailers had to fail for Amazon to succeed. 20,000 media companies had to fail for Google or Meta to succeed. 20,000 device companies have to fail for Apple to succeed. It's really a sad situation when you think about it. But if you're an investor, your portfolio doesn't work if you don't own some of the Magnificent Seven, right? Every other investment idea probably is not working. And if you're a company executive, you're probably not winning. Now, in technology, if you want to win, you can't miss the next wave. Whether it's personal computers, whether it's the graphical user interface, whether it's the internet, whether it's mobile computing, cloud. Right now, everybody talks about AI, 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 AI. If you don't hear about AI, you're probably deaf. But I'm here to talk about what I think is the most compelling next wave, the wave that you can catch. If you think you can compete with NVIDIA, you have at it. But I don't think Apple thinks they can compete with NVIDIA. It's not easy. But digital capital is the next wave, and everybody can catch this wave. Now I've laid out the problem. Let's talk about the Bitcoin solution. What is Bitcoin? Bitcoin's the next wave. Today, it is the 7th largest asset in the world. And you can count them, right? Number 1 asset in the world, gold. 5,000-year head start. If you're not 5,000 years old, if you don't want to wait 5,000 years, you're in the right place, because I'm going to give you a fast track. After that, you got the Magnificent Seven. You got NVIDIA, you got Apple, you got Microsoft, you got Amazon, you got Alphabet, you got Meta. And then just creeping in there, you've got some silver, and then you've got Saudi Aramco. But if you look at this, what you'll see is that the fastest horse in the race, the one that's actually moving up the leaderboard the fastest, is Bitcoin. 62% a year, ARR. Not for the past year, not for the past 4 years, not for the past 6 years, for the past 10, ever since it started, more than 62% a year. That's just the past 4 years, though. And it is running to the top, and it will run past all the Magnificent Seven, and it will run past gold, and I'm going to show you why in the rest of my presentation. Now, it's not just the 7th largest, right? It's the fastest growing. It is the most popular in the world. Most popular asset. I walk to the beach in southern Italy, people recognize me. I'm walking down into a hamburger shack in Uruguay, people recognize me. I'm on the tarmac and the runway in Switzerland. The guy that's servicing the engines and he's guiding the airplanes on the flight line, they recognize me. Right? Bitcoin is spread across hundreds of millions of people. Probably 500 million people know what this is, and they're all very passionate about it in a way that they're not passionate about maybe Saudi Aramco or Meta stock. It's the most interesting because something is happening every minute of the day. You know, it crashed at 90,000 2 days ago. People are losing their minds. Smashed through 100,000, my phone's ringing off the hook. It's always moving. Much more interesting than these other things. It's pure digital. Something that, if you can wire $1 billion from one iPhone to another Android phone between 6 billion people in a split second, that becomes very interesting and very digital, right? You can't digitize silver, you can't digitize gold. Most of these other things are just securities. You can't even take custody of your own security. You can't trade those securities on Saturday afternoon. So Bitcoin is pure digital asset. It's useful. How useful? If you need $1 billion in 5 minutes on Saturday afternoon and your life depended upon it, there's only one thing up there that will actually give it to you. Only one thing. People, what's the consequence of that? Well, it's volatile, it's interesting. And lastly, it's global. The Magnificent Seven stocks are really just Western. They're United States, a little bit of Western Europe. Saudi Aramco is Middle East. You don't see any Chinese companies up there, right? And so Bitcoin is very, very rare combination of things that make it interesting to billions of people around the planet. Now, what happens when I put Bitcoin on my asset allocation chart here? Well, it just punches a hole in it, right? Like when I didn't put Bitcoin up there first because you wouldn't see anything else. Everything else is relatively uninteresting against 60%. What you see up there is there's an answer, and then there's a bunch of noise. There's a signal, and there's a bunch of noise. And if we look at it, that's 60% for 4 years. And when you look at it against this chart, this makes it much simpler. You have a bunch of money. Lockdowns come along. In August of 2020, you can buy bonds, you can buy gold, you can buy real estate. All three of those don't beat the S&P index. They don't beat the hurdle rate. The conventional cost of capital is the S&P index. It's 13% every year for 4 years. Real estate, probably less volatile, but lower boost. Gold is only half as powerful. If you capitalize your entire bank on bonds, well, you end up with Silicon Valley Bank, right? Your bank goes bankrupt. Bonds are an awful investment. The Magnificent Seven, good idea. Buy the 7 greatest companies in the world. Okay, good idea. That doubles the S&P, right? You can outperform if you just buy the good ones. I've said oftentimes, I say, diversification is selling the winner to buy the losers. So when you're holding the S&P, you gave up the Magnificent Seven. You might as well just buy the top 7, throw away everything else. But the problem is, you're living with the top 7. A year ago, the first ETFs were approved for Bitcoin, right? In January of 2024. BlackRock brought out one called IBIT. BlackRock is the largest money manager in the world. They have 1,101 ETFs. And the Bitcoin ETF went from dead last to number 13 in 12 months. Basically, in the first year, it skyrocketed above 99%, right to the top. And in fact, it didn't just go to the top. It turns out that IBIT is the most successful ETF launch in the history of Wall Street. In the last 40 years, the biggest innovation since Bitcoin, the biggest innovation, if you got to go back 40 years, is ETFs. This idea you can buy a package of the S&P index called SPY. And they've been around forever, and this Bitcoin spot ETF just blows past everything and scorches the earth. That's how much demand there was to invest in this asset. In fact, BlackRock's ETF outstripped its own gold ETF in the first year. Again, gold 5,000 years old, everybody knows what it is. Digital gold in the first year blows past. That's how fast it's moving. There are 20 ETFs. The top 20 ETFs we collated, turns out 10 of them are all Bitcoin related in the last 12 months. So what you can see is that Wall Street is fascinated with Bitcoin-based ETFs, derivatives, anything that's related to Bitcoin is really changing the world. And those ETFs had not a nickel in them, January 1st of 2020. Now they have $109 billion of AUM. And you can see this is becoming a major trend. But it's not just a trend in the US. These ETFs are popping up everywhere in the world. You can see these are the global ETFs. They're popping up in Hong Kong and Germany. They're popping up in South America and Brazil and Australia. Pretty much every major capital market has an ETF launching. Why? Because they make it possible to buy Bitcoin in 10 seconds on the phone. Also, because if you're China government, you want people to keep their Bitcoin in a bank regulated by a Chinese regulator. you don't want the capital to flow out of the country. And so these solve capital control issues, compliance issues, tax issues, convenience issues. And 6% of all the Bitcoin has just been slurped up by these ETFs. The people that are buying those, generally, they're just long-term holders. They're buying them for exposure. And so as they buy up this Bitcoin, they're taking it out of circulation. The price is being squeezed up. I was talking about alternative investments, right? Well, here's 60 global billionaires invested in Bitcoin. What is Bitcoin? Imagine Bitcoin is 100 rich families sit around and say, well, we like money, we don't trust banks, we don't trust governments, we don't trust any currency, we like to keep our money, but we don't trust each other. So they create a bank in cyberspace, they cap out the number of units at some number, we'll call it 21 million, and then all those families can buy into that bank, and since they don't trust each other, they all run a copy of the bank software. That's Bitcoin. Bitcoin is just a very elegant idea for how you get to keep your money.